Hang tight, Michael. On Friday, we did get those reports that Qualcomm supposedly made a takeover approach to Intel in recent weeks. As the dust settled over the weekend, neither company has commented and no deal is in place. Bernstein is out with a new note saying they find it hard to see a deal working out financially for both companies, given the number of risks and uncertain returns. Joining us, the author behind that note, Stacey Rasgon, is Bernstein's U.S. senior analyst. And Daniel Newman is here as well. He's the CEO of the Futurum Group. It's great to have you both along. Stacey, your thoughts here. If not Qualcomm, then what for Intel?
So what I said, by the way, was I don't see a deal working out if it includes the fabs. That's the issue, because the fabs by themselves, I mean, they're losing a bunch of money. They require a ton of capex. If you have to support those investments, I don't see a deal getting done with cash that doesn't drive leverage to like unsustainable levels. And if you do a deal with stock, it's massively dilutive. I just don't see it working out. And I don't know that I see a deal without the fabs is the problem, because what do you do with them?
What do you do with the fabs, period? I guess that becomes its own question.
Well, and this is the issue that they have. That the factories, like, people have always considered that Intel might split them off at some point, which maybe they will, but you can't do it now. They're losing $12 billion a year. They can't stand on their own. At the same time, I don't think you can sell them to somebody else to operate, like a TSMC. I don't think TSMC or anybody else wants to run their factories. And while hypothetically, I think you could have a scenario where you just scrap them, like you sell the tools for whatever they're worth, you go whole hog into outsourcing. I don't think that's a politically viable situation right now, and you'd have to scrap the entire roadmap the way it stands. And like, long story short, Intel's having enough issues with it. Why would Qualcomm be the one to make the fab issues better if they're going to keep them? I just don't see it working out. And I'll be honest, for Qualcomm's sake, I would not want to see them do a deal with Intel that includes these factories.
In the ever-volatile world of the stock market, sometimes a ripple creates a tidal wave. And this week, an intriguing rumor had both seasoned investors and market enthusiasts buzzing: Qualcomm's potential move to acquire Intel. While major acquisitions aren't uncommon, the mere speculation of this tech giant tango had the market's pulse racing. However, don't let the excitement fool you just yet. Benchmark analyst Acree has his own well-founded reservations about this high-stakes dance. Will Qualcomm genuinely make a play for Intel, or is this move destined to remain a tantalizing what-if? And what does Apollo Global Management have to do with all of this? Stay tuned as we unravel the intricate web of this headline-grabbing development. Welcome back, everyone, to Investocracy.
Daniel, let's turn to you and get your take on whether a deal is plausible here. Do you agree with Stacey or not? And number two, the question of the fabs. Well, isn't that what the CHIPS Act and the government says they want? They want the ability to manufacture semiconductors here in the United States?
Yeah, I agree with Stacey that this is not a probable deal. I think I said it in many ways in the note that I put out. I just don't see how this works. I do think there's a bit of darkest before dawn going on with Intel. I think they had their darkest moment. I think the Lip-Bu exit. I think the rumors on 18A were somewhat. They got a turnaround last week when you got the AWS win, when they got the $3 billion from the DoD, when they did make the decision to separate the P&L fully and actually spin off a subsidiary. I called that a step function towards a possible spin out in the long run. But I think these are the steps that Intel need to make. And I think they may have actually seen the worst. And I know maybe this makes me an optimist. And Stacey, you and I have had this debate before, but I actually think this could be the darkest moment. It's actually moving in the right direction, Tyler. And somewhat, I think this has been good news. Now the Apollo news becomes much more realistic to me.
Acree's remarks couldn't have come at a better time. With Qualcomm and Intel at the center of market speculation, his insights provide a much-needed reality check. According to the Wall Street Journal, the idea that Qualcomm was considering an acquisition of Intel was enough to turn heads, but Acree immediately identified some critical gaps in the story. He pointed out that this particular rumor was particularly thin on specific details, raising questions about the feasibility of such a massive transaction. Let's break it down. Qualcomm would undoubtedly benefit from acquiring Intel's well-established chip design business, which prominently serves the PC, notebook, and server markets. However, that's where the dream begins to falter. Qualcomm would face a steep financial hurdle to make this acquisition happen. We're talking about a significant financial burden where Qualcomm would need to offer a whopping 40% to 50% premium on Intel's trading price, currently hovering around $22. That's no small change. This significant financial outlay would put immense pressure on Qualcomm's balance sheet, raising questions about the sustainability of such a move. As if that wasn't enough to deter Qualcomm, the regulatory roadblocks loom large. Anything this big would attract a high degree of regulatory scrutiny from all fronts: US, Europe, and China. Can anyone say déjà vu? Remember Qualcomm's 2018 attempt to acquire NXP Semiconductors? That venture ended up costing Qualcomm a staggering $2 billion due to a last-minute rejection by China's state regulator. Talk about a nasty breakup fee. These regulatory hurdles can derail even the most meticulously planned acquisitions, making it a risky proposition for Qualcomm's shareholders and stakeholders alike. But before we go any further, if you want to keep up with Intel's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Back to the video.
I don't know if you want to respond to what Daniel said, that maybe it is darkest before the dawn for Intel, and maybe Apollo does now come in with a much-needed cash infusion.
Well, again, I don't think they need the cash infusion. Maybe I'm an optimist here, but I actually don't think they're desperate for cash. If you add up the CapEx cuts and the OpEx cuts and the dividend suspension and the private equity, they've already got a deal with Apollo. They sold half their Ireland fab to them for $11 billion, and the Brookfield money and the government subsidies. It's like $40 billion of incremental cash onto the balance sheet by the end of next year. I think their cash balance is actually okay. So I don't know. And I'll be honest, I may just be pessimistic here to Daniel's optimism, but I don't think you want to take private equity money unless you absolutely have to, right? Like you're not going to, those guys are not billionaires for no reason, right? Like you're not going to get the best thing for them. You don't want to do that sort of thing, I think, unless you have no choice. So I understand the whole idea. It's a vote of confidence. I mean, fine. I'd rather see them get along without actually having to take funding from private equity. So I don't actually know how good of news that actually is.
Michael, your thoughts here on Intel and a possible combination?
Well, it's a bit more in the weeds than I focus on. But I think, when we have this backdrop of a soft landing plus rates coming down, I think you'll start to see more opportunistic value-searching investors look for deals. And I think there's opportunities there, and I think some of the banks that are doing those businesses can also benefit as well.
It gets more intriguing when you throw Apollo Global Management's $5 billion investment plan for Intel into the mix. Apollo's intentions emphasize the attractiveness of Intel's business segments, but they are savvy enough to know where to draw the line. Unlike Qualcomm, Apollo's move seems more calculated and less prone to the pitfalls of regulatory tangles and financial overextensions. Apollo's strategic approach could serve as a blueprint for sustainable growth, focusing on long-term value creation rather than short-term gains. Acree's analysis doesn't just stop at the potential pitfalls, he also highlights Intel's recent design challenges. Over the past few years, Intel has lost some of its market share in both the personal computer and server markets to AMD. Add to that Intel's lagging competitive edge in artificial intelligence, and you start to see why Qualcomm's potential bid looks more like a desperate Hail Mary than a strategic masterstroke. Intel's waning dominance in crucial sectors raises red flags about its future viability, making it a less attractive target for acquisition. Perhaps the most compelling aspect of Acree's analysis is the broader context. Look at Nvidia's recent failed attempt to acquire ARM holdings. That deal fell apart due to regulatory scrutiny despite Nvidia's best efforts, costing them $1.25 billion in breakup fees. Clearly, history has not been kind to ambitious tech takeovers lately. These precedents serve as cautionary tales, underscoring the complexities and unpredictability of large-scale tech mergers and acquisitions. With all these factors in play, Acree remains firm in his stance. Qualcomm is unlikely to place a definitive bid for Intel. His recommendation? A hold rating on Intel, but a resounding buy on Qualcomm, with a target price of $240. Why? Because despite the acquisitions drama, Qualcomm remains a strong contender with considerable market potential. Qualcomm's robust portfolio, technological advancements, and strategic partnerships position it well for future growth, making it a promising investment opportunity. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
What was your initial? We've seen not just Qualcomm headlines, but now possibly a private equity involvement with Intel. I don't want to say the vultures are circling because that would be unkind, but the bids are circling. Let's say that.
Yeah, I think you're going to continue to hear or see headlines just in the coming days and weeks. You've already seen them in the past about options Intel may have, either with strategic partners, splitting businesses, spinning off businesses. I mean, they're just basically taking a look at everything but, out there to improve their current, business situation and their options going forward. But again, a lot of that, I think, is just noise and doesn't make a lot of sense. And that's kind of what I was saying this morning as it relates to Qualcomm buying the entire company. I just don't see that as likely or a good strategic fit.
I wonder if this is going to be about taking over Intel broadly at all, or, I mean, it's effectively two companies right now. Part makes their own chips. There's a foundry that wants to make chips for other people. Which one of those businesses do you think bidders are most interested in? Or even as the company says they're not doing this, if they were to spin one out, which one would it be?
Well, I think there's a lot of uncertainty and risk associated with the manufacturing or foundry business. First of all, it's heavily dependent upon Intel's own volumes of chips that they sell, which they've been losing market share and struggling. And second, it's very capital intensive. I mean, you need billions and billions of dollars to fund it, and you need to win external non-Intel customers, which is a huge question mark. And you're going up against the best in Taiwan Semi. I think there's a lot of value in the design business, which is for PCs and data centers, and that's where there's pieces that companies would want. I just don't know if global regulatory bodies would approve any sort of separation or buying of those assets.
So, where does this leave us? Qualcomm might not be making a play for Intel, but that doesn't diminish its allure as an investment. With a buy rating and a $240 price target, Qualcomm's robust market position makes it an enticing option for savvy investors. As for Intel, its challenges in the design and AI sectors and looming regulatory issues reflect a more turbulent road ahead. Investors may need to exercise caution and consider the broader market dynamics before making any decisions regarding Intel. What do you think? Is Qualcomm wise to steer clear of this corporate maelstrom, or could an imaginative strategy change the game? Share your thoughts. And let's keep this conversation going. After all, in the dynamic world of stocks, your insights could be the next market mover. This ongoing story serves as a testament to the ever-changing landscape of technology and finance, reminding us all of the importance of due diligence and strategic foresight in investment decisions. And finally, if you would like to know what companies like Intel have been up to these past few days, go ahead and click on the next video on your screen. See you there.